This video combines debentures of IFRS 9 with IAS 8. If we have a look at the given information, SciCat Limited purchases and sells endangered plant species. The company is listed on the JSE Limited, has a 28 February reporting date. The following investment is the only long-term investment of SciCat Limited. So SciCat Limited is the investor. They will have the financial asset. When they have debentures, the reason it's a financial asset is because they have a right to receive their money back once the debenture matures and the maturity payment or the redemption payment is done by the issuer. So SciCat Limited acquired 1,000 Rand, 8% debentures. So not only acquired one debenture, they acquired 50. What is the nominal value of those debentures? Each one is a 1,000 Rand debenture. What is the nominal rate linked to those debentures? 8%. If we want to know the return that SciCat Limited will receive in cash, it is the interest that they will receive in cash over the period of the debenture. How do we calculate that cash flow interest? Nominal value times nominal rate. And just remember, when you do the nominal value, it's not just one debenture that they invested in, it is 50. Those debentures were issued by Tree Limited on 1 March 2011 and they were issued at par value, at nominal value. Is that the fair value? We don't know. You cannot assume it is. It might be, but we will need to go and calculate. Why do we need to calculate the fair value? Because in terms of IFRS 9, initial recognition has to always be at the fair value. We continue with the given information. Tree Limited is also listed on the JSE Limited. Interest on these debentures is payable annually in arrears by Tree Limited on 28 February. We know that the cash flow interest, the interest that will flow from the issuer Tree Limited to the investor SciCat Limited, is the nominal value times nominal rate. Does not mean that it should always just be a once a year interest payment. It is the case in this example, but you could have interest payable monthly. You could have it quarterly or 6 monthly, but in this example, annually in arrears on 28 February. The debenture is redeemable. 3 equal annual installments, so not only once off. It is redeemable at a discount of 5%. Discount of 5% on the nominal value. The first redemption will be done on 28 February 2012. So that's at the end of our first year. We acquired on 1 March 2011. 28 February 2012, the first redemption payment will be done. The market-related interest rate on similar debentures is 7.5% per annum. No transaction costs were incurred by SciCat Limited. Okay, there could have been transaction costs. They could have paid a broker to do the transaction for them. In this case, no transaction costs. Just remember, if there were transaction costs, that is not an amount that flows in cash between the investor and the issuer. It is paid to a third party. Both the investor and the issuer can have transaction costs. It could be different amounts. Doesn't flow between each other. It flows to third parties. The next paragraph helps us to categorize the investment, the financial instrument correctly. It says the objective of SciCat Limited's business model is to hold the debentures in order to collect the contractual cash flows. The contractual terms of the debenture gives rise on specified dates to cash flows that are solely payments of the principal and interest on the principal amount outstanding. The debentures were not designated as measured at fair value through profit and loss. Because of this paragraph, we now know that this investment, the financial asset, will be in the category at amortized cost. The given information then continues by explaining what was done. How did SciCat Limited account for the investment? They don't give you the journal entries. They give what was done in words. You need to figure out what the journals would have looked like depending on what you read here. So, SciCat Limited has accounted for these debentures. How? By recognizing their investment at the cash amounts paid, reduced by any cash amounts arising on redemption. Interest on these debentures has been recognized at the nominal rate of return applied to the nominal amount that's not redeemed. The short-term portion of the financial asset for presentation purposes, so that's on your SFP to decide what is current and non-current, it has been calculated as the actual cash amount that would be redeemed within 12 months from the reporting date. Any balance remaining on the investment account after the final redemption has been accounted for, if there's still a balance left, it will be recognized in profit or loss for that year. So they don't give you the journals, they give you a paragraph stating what was done. They don't tell you whether that's right or wrong. They just say to you, this is what was done. So if we now have a look at the required of this specific question, it says, based on the information provided above, disclose the relevant note of SciCat Limited for the year ended 28 February 2014. So the debenture investment was acquired on 1 March 2011. We are now already in the reporting period 28 February 2014. That's our current year. Based on all the information that you read, disclose the relevant note in accordance with IAS 8, accounting policies, changing in accounting estimates and errors. So you need to decide, what did they do here? Was that correct? Which note would apply here? Can it be an accounting estimate? No. Can it be a change in accounting policy? No. So what is left? A prior period error note. To present a prior period error note, we will need to know what was done, what should have been done, what are the differences, and those differences, which line items in the financial statements are affected.